Good morning, students. Let us continue with the chapter number 5, that is accounting ratio and analysis sums. Now, in that we've studied four types of ratios, that is profitability ratio, liquidity ratio, solvency ratio, and efficiency ratio. Now, first one, that is profitability ratio. In that we are having four ratios, that is gross profit ratio, operating ratio, operating profit ratio, and net profit ratio. Now first one, that is gross profit ratio. So gross profit ratio formula is gross profit upon total net sales into 100. Gross profitability ratio, what does it measure? It measures the profitability of the business or gross profitability of the business through this ratio. And it is an income based ratio, so thus we can say that increasing trend of this ratio, it shows or it indicates enhancement in the profitability of the business, and it shows the relationship between gross profit and net sales. So the important formulas to remember, that is gross profit is equal to sales minus cost of goods sold. Now what does we include in cost of goods sold? So that is opening stock of goods plus purchase expenses minus closing stock. For short sums, like cost of goods sold is equal to sales minus gross profit, and if loss is given, then cost of goods sold is equal to sales plus gross loss. Net sales is equal to sales minus sales written. Exercise first question, that is determine gross profit ratio. Now in first one they have given us sales and gross profit. So sales and gross profit directly it is given, so we'll apply it in our formula, that is gross profit ratio is equal to gross profit upon net sales into 100. Gross profit amount is given 3 lakh and the sales it is given 10 lakh. We will calculate it, so we'll get 30% as our answer. So our gross profit ratio is 30%. Now in second number they have given us sales and cost of goods sold. So in our formula we have learned, that is gross profit is equal to sales minus cost of goods sold. So sales and cost of goods sold are given, so we can calculate gross profit from that first of all. So gross profit is equal to sales minus cost of goods sold. Sales it is given 15 lakh and cost of goods sold it is given 12 lakh. So 15 minus 12, that is 3 lakh is our amount of gross profit. Now we'll place it in our formula, that is gross profit ratio is equal to gross profit upon sales. So gross profit, that is 3 lakh, sales which is given in our question 15 lakh into 100. So here in second condition our gross profit ratio is 20%. Third one. Now in third condition they have given us sales written, opening stock, closing stock, purchase and purchase expenses, right? So cost of goods sold first of all we will calculate over here, and as sales written is given, so we will calculate our net sales. For calculation of gross profit, cost of goods sold it is required, so that we will calculate first. So what is our formula for cost of goods sold? Opening stock plus purchase expenses minus closing stock. We will replace the values from the question. So our cost of goods sold here it is 11,50,000. Now sales it is given 20 lakh and sales written it is given 2 lakh. So I'll calculate net sales for the same. Sales minus sales written, so that is 20 lakh minus 2 lakh. So 18 lakh is my net sales. Now for calculation of gross profit ratio I require gross profit. So gross profit will calculate, that is gross profit is equal to sales minus cost of goods sold. Sales value it is given in your question, that is 20 lakh. Cost of goods sold we have calculated, that is 11,50,000, which value we will put. So my gross profit over here it is 8,50,000. Now we'll place both the things in our formula, that is gross profit and net sales. So gross profit ratio is equal to gross profit upon net sales into 100. So my gross profit is 8,50,000 divided by net sales is 18 lakh into 100. So gross profit ratio is 47.22%. Now second profitability ratio, that is operating ratio. So the formula for calculating operating ratio is cost of goods sold plus operating expenses divided by net sales into 100. So cost of goods sold we are knowing what does it mean, net sales we know. Now what do you mean by operating expenses? So operating expenses, it includes your office expense, any kind of administration expense, sales distribution expense, employee benefit expenses, depreciation, amount written off. These all the things are included in your operating expenses. Any kind of financial expense or taxes, they are not included in your operating expenses. Operating ratio, it shows the relationship between your operating cost and sales, and from this we can know the efficiency of the business. And operating ratio, as we can see, it is a cost based ratio, right? So cost, how much it will decrease, that much it is good for the company. So we can say the decreasing trend of operating ratio is favorable, which shows the increasing operating profitability. Question number 5. From the following information, calculate operating ratio. Here we have to calculate operating ratio. The things which are given to us, that is non-operating other expenses, so it will not be included. Depreciation, it will be included in your operating expenses. Administrative expense, that also will be included in your operating expenses. Then sales, it is given 6 lakh. Tax rate, it is given 30%. Income of interest and dividend. Now income of interest and dividend, that will not be included in your operating expense. Sales expense, that will be included. Then cost of goods sold, that is directly given, which will use, and financial expense, so that also will not be used in calculation of your operating expenses. So first of all we will calculate operating expenses. So that is administrative expense, sales expense and depreciation. So addition of all three, so that will be my operating expense. Cost of goods sold and net sales, it is directly given in your question. Your cost of goods sold, it is 3,25,000 and net sales, it is given 6 lakh. So we will replace them in our formula. Operating ratio is equal to cost of goods sold plus operating expense divided by net sales into 100. Cost of goods sold, that is 3,25,000 plus operating expenses, that is 1,75,000 divided by net sales, which is given in your question, 6 lakh rupees into 100. So that is 5 lakh into 100 divided by 6 lakh. So my operating ratio here, it is 83.33%. Now next profitability ratio is operating profit ratio. The formula for operating profit ratio is operating profit upon net sales into 100 or 100 minus operating ratio, which we calculated in previous sum. Operating profit is equal to sales minus operating cost, and operating cost we know that is cost of goods sold plus operating expenses. Now operating profit ratio, it shows the relationship between operating profit and net sales. This ratio indicates the amount of profit earned by the unit, and as it is a profit ratio, so we can say it is an income based ratio. So increasing trend of this ratio is good for the company. Now question number 6. In this question we have to calculate operating ratio and operating profit ratio both. So sales, it is given 39 lakh, cost of goods consumed, it is given 25 lakh, sales expenses are given, loss due to accident, factory expenses are given including depreciation, so that will be included in your operating expense. Sales expense will also be included. Then wages, so wages will be included in your cost of goods sold. Administrative expense, that will be included in your operating expenses. Then interest on loan, this is your financial expense. Dividend received on investment, and tax rate. So first of all, we'll calculate cost of goods sold and operating expenses from this. So cost of goods sold is equal to cost of goods consumed plus wages, so that will give you cost of goods sold, that is 27 lakh. And operating expenses, so that is administrative expense plus sales expense plus factory expenses including depreciation. In operating expenses, we do not include any kind of financial expense. So cost of goods sold and operating expenses. Now we'll replace them in our formula. So operating ratio is equal to cost of goods sold. So cost of goods sold is 27 lakh plus operating expenses, that is 3 lakh, divided by sales, that is given in your question 39 lakh into 100. So here 30 lakh divided by 39 lakh into 100. So my operating ratio is equal to 76.92%. Now for calculation of my operating profit ratio, first of all I'll calculate operating cost. So operating cost is equal to cost of goods sold plus operating expenses. So that is equal to 27 lakh plus 3 lakh. So that is equal to 30 lakh. That is your operating cost. Now I'll calculate operating profit. So operating profit is equal to net sales divided by your operating cost. That is equal to 39 lakh minus operating cost, that is 30 lakh. So my operating profit is 9 lakhs. Now the second ratio, that is operating profit ratio. So operating profit ratio formula is operating profit divided by net sales into 100. Operating profit is 9 lakh, net sales is 39 lakh into 100. So here my operating profit ratio is equal to 23.08%.